The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And I can see quite a few have taken an early mark for Easter, so we're right into Easter. It's actually Good Friday down under, and the roads are full. Wonderful to have you all with us, folks. The tutorial guys are all here, David and JP, Jean-Pierre, Jean-Philippe. I keep saying Jean-Pierre, it's Jean-Philippe. Two of the most important names in French history, of course. They had a number of King Philippes, very important. Okay, so that's good. George is with us. Of course, Greg Palladini, hello to you, my friend. I hope you're feeling well, and good to have you with us. Mark L. is here. Wonderful to have you, Mark. No party without Mark. Peter Mack, who's not a day trader, is here. Pietro, who I've been calling Peter, is a new client. Wonderful to have you with us, Pietro. Sean's with us, lots of Georges, and the others coming in late here. Okay, so we've got a lot to talk about today, and don't leave early. There's some important stuff at the end I want to make sure that you all get. So let's move on here. And as you know, markets are rational, orderly, and sometimes predictable. And the creating and trading Danielcode time signals, the best trading system I know. For those of you who are not aware of it already, you should go and have a look at the videos, which I'm about to give you links to, which are interviews with past and existing Danielcode clients. And it's important to hear what they say. It's actually, people say, you know, I went to so-and-so, he's a great trader, I didn't learn much. Some people can teach and some people can't, and they're entirely different skills. And the best way of finding out if what we do will suit you is to listen to some of our clients. That's much more important than anything I could say to you. So this is a new initiative that we started on 2 weeks ago, and it's been pretty good. We've had a number of people who wanted to have a chat about their trading, about what's the best parts of the Danielcode from the use, what's suitable for them, etc., etc. So I think it's useful, folks, if you'd like to have a chat about your trading, about your dreams and aspirations, anything else you'd like to chat about. If you send me an email, I'll set up a GoToMeeting, now called Go2, isn't it? I'll set up a Go2 meeting to discuss it all with you and be happy to do that. Okay, so Battleground. You know, when I think of what happens to the uninformed retail trader, I don't know how they survive. I have the highest respect and admiration for them, because there's so much stuff goes on in the markets that absolutely, what's the word I'm looking for? I don't want to say corrupt, but it's pretty close to it. Anyway, the first battle, of course, goes on in your head, and that is a very, very real battle. And some really excellent traders have that problem and have overcome it. And of course, Mark L. is with us today. He's an absolute Danielcode stalwart, and he's done an interview with me, which you'll be able to see. I'll show you the link in a moment or two. And Mark's the most stable guy you could possibly imagine. He's an engineer by profession, and an all-round hard worker, and he had a problem with nerves. And I said to him, I mean, Mark, you're an engineer, you're supposed to be rational and orderly, but I'm sure he is in everything except his trading. But with trading, he's a very nervous trader. And if he's looking at the screen, he's going to react. And let me tell you, that's not an uncommon occurrence. I had it myself for years and years. If I'm watching a live screen that's moving, it's almost like your DNA is being triggered, you have to do something, and that something is interfering with the trade, which is a bad thing. So have a look at the first of the videos on the list. I'm going to show you in one or two slides, and that's an interview with Mark L, where he tells you how he's had that problem in his head, how he's overcome it. And I think of the average trader, they haven't got a system. They haven't been able to backtest and run up a proof of trade. They've got no idea how earnings fall. Very important when you listen to Mark's interview, and also I think Justin, that they've created charts of their trading, and very important that they're able to look at those charts in times that their trading is just not going so well, and see that it's all happened before. It's all happened before. There's nothing new under the sun. What has been is and shall be again. And it's a big problem, but it can be overcome. There's some fairly simple steps which Mark Hill will tell you about. But if you think of the things you've got to put up with, the big boys games that go on in markets really are, I don't want to say corrupt, but at least to me they're scandalous. Some of this stuff is literally devices to get an earlier feed of price. In other words, it's not really trading, in my view, it's cheating. But that doesn't matter in this world. The business of trading markets is all about money. And if you can find something that'll give you an edge, people are only too happy to jump into it. And, with this high-frequency trading, which has been a bugaboo for years and years and years, people pay vast amounts of money, really serious money, to have their servers located closer to the floor of the New York Stock Exchange. And what we're trading as futures traders, we are trading a derivative, but it's based on what's going on the floor of the New York Stock Exchange. If you're trading the S&P futures, that is based on the total price of all of those 500 companies that are in the S&P, and then there's a derivative plus or minus on top of that. Same with the others. Dow's the top 30, Nasdaq's the other exchange, of course, Russell. They're all the same. What we're actually trading is stocks. We're trading aggregates of stocks, and we're taking a derivative view of whether price, in our belief, should be higher or lower. So think about that going on all the time. Think about dark pools. A lot of these big firms get authorized to run their own, effectively their own trading floors. They do order matching. Their argument is they've got sellers and buyers. They don't want to send those orders out somewhere else. They want to process them themselves. And over the years, they've been allowed to do that. And Robinhood, I'm sure you've heard of it. It was some guy's very, very clever idea that I will start a trading machine, but I won't charge the clients any money. And what he did, of course, the brokers all live on the commission. That's their lifeblood. And what he did, he was clever enough to do it, is he said to the various regulators, I'm going to take all of these retail orders from clients. I'm going to tell them they don't have to charge any and don't have to pay any commission. So I'm going to get a massive amount of work. And what I'm going to do is I'm going to sell those orders to the 1 or 2 or 3 biggest players in the market. And that's a good thing. Well, that's where you lost me. How that's a good thing if the basis of markets, fairness in markets, is that everyone gets the same information at the same time, then it can't be a good thing. And how they managed to talk the regulators into it, it has a lot to do with regulatory capture, which is when the regulators would rather be in the position of those that they're regulating, and looking for that revolving door that seems to work between, at least between government and private industry all the time. And They also argue that by doing this for their clients, they'd get better fills. And that, to me, that is just totally illogical. So you've overcome those things. They're part of the battles that are going on all the time. And the next one is, think about this, 32.7% of the bars are not on our charts. We lose 104 for weekends. We lose 12, or is it now 13, for market holidays. And that means there should be a constant 1 in 3 error. But somehow or other, Danielcode overcomes every obstacle. And that's because it's the DNA of market. All of the ratios that we use, the time cycles, they're created firstly by the Danielcode, but then to give them any effect, they're based on market price and market time, highs and lows. And the only real support or resistance you'll ever see on a chart are Danielcode ratios, the targets, and daily highs and lows. Very important. Okay, so they're the issues that you've got in your head. They're the issues you've got in the marketplace. Don't forget the lag between what the big boys get their price and when you get it. I did a little search the other day with a guy who told me he was an expert on IT, and he finished up calculating that there are 327 leaps from my computer to our major computer with GoDaddy in Denver, Colorado. 327 leaps. And if any one of them is bug, you're going to have a problem. But anyway, it seems to work despite everything. Okay, let's think more about how we're going to handle all this. So have a good look at these 3 links here, folks. And they're also on the website. If you have trouble accessing them here, go to the Danielcode website, www.thedanielcode.com, and have a look at these videos. The first one is an interview with Mark L., who's with us today, who's a fabulous trader, and it's so informative. I'm amazed. I was talking to 1 or 2 of our tutorial guys during the week, and they haven't seen these videos. Very important you do, because that one about Mark L's one, apart from the brilliant work he's doing in it and the amazing pieces of trading he's reporting, also deals specifically with his problems of being emotional, about being triggered if he's looking at live markets, etc. The second video is by a guy, great friend of mine, Justin. His father's a friend of mine. He started off, the father started with the Danielcode, and then Justin got involved. And Justin's been working very hard over the years, and this has been a 7 or 8 year journey for him, because he's come to the Danielcode, he's gone away, he's come back, he's gone away. He's had a lot of other things happening. He's a young man with a new business, a new marriage, a new baby, all sorts of demands on his work to travel, but he has done a massive amount of research, and you should look at that for no other reason, just to see the research. One of the most telling things he says is that he has paper traded hundreds and hundreds of markets, and he's never found a losing year using Danielcode time signals. Video 3, this is from a charming couple, Scott and Amy. They live in Colorado, and it's interesting because they were pretty new to trading. Scott said he'd done a bit of trading years ago. Amy had never seen a trading chart in her life, and within a matter of months of doing their Danielcode trading tutorial, they were getting results like 500% in 10 months. I think that was on wheat and something else, some other results as well. And in that particular video, you also get to hear Greg Palladini and Mark L. Talking a little bit about it as well. So really important stuff for you folks. Do take the time to watch those videos. You'll be instructed. Okay, so last week has been a very, very busy week, apart from work, for all other reasons as well. So busy, in fact, that if you look at this chart, which I've just updated from our last session 2 weeks ago, you can see we had a full moon, which is shown here. It's actually the wrong date for us. It's the Chicago full moon, I think, and with the time differences, we sort of slip into the next day. But you had this last full moon, the apogee gave us the high for the correction, and 2 days later, the full moon gave us the low. Very, very good stuff, these moon cycles. I know people laugh at them, but it's real. And it's not because there's a full moon. And it's not, it's what you can't see. It's what's happening is the full moon is only an obvious measure of something physical that's going on in our world. And that physical thing is that the moon creates a very, very substantial gravitational pull on the Earth. That's why we have tides. And if you think of millions, hundreds of millions, billions of tons of water being dragged around the Earth every day for tides, high tides, low tides, that's the gravitational pull of the moon. And when that changes, which it does at apogee and perigee and full moon and new moon, it's going from an accelerating phase into a reducing phase. And it's that change of momentum in the physical planet that's creating these time signals. And as you can see, they're pretty deadly, really. In fact, they're very, very good. It's worth taking some time to think about it all. But my point was, I was so busy, I missed my full moon lunch with Mick D, who I don't know if he's here with us today. Vicky's just arrived. Hello, Vicky. Akshay, congratulations on what you've done, mate. Anthony D's now here. David's with us, Florian's with us. Everyone's coming a little bit late today, guys. Nice to have you with us, all of you. Here we are, in fact. I'm delighted that so many of you have made us today. That's really a great, and Vicky, our only lady here that I know of. There may be others, but it's wonderful to have all of you here in a very busy evening, I'm sure. What I wanted to show you here, this is the long-term chart of bonds, and at our last session 2 weeks ago, I told you that it was trying to hold on to that extended dotted line, which has now become very important support. Worth keeping your eyes on. This is one of our 24-day charts. It's nothing happening too quickly, but it's important to just be aware of what's happening there. And here we are. What else is happening here? We are in one of our major time cycles, and it will be in the expiring phase until April the 8th. So just keep an eye on that. Frank is not expecting anything dramatic. I'm going to show you his comments and his chart in a moment, but we are in one of our major time cycles where anything can happen. It's hard to think of anything. I mean, you know, is it really ridiculous to say that this wonderful, amazing market rally, the continuation of the bull market, has been caused by inflation? I mean, inflation's supposed to be bad for markets. It's been very, very good for markets this time, hasn't it? They're really quite dramatic, roaring, all-time highs in the equities, all-time high in gold, quite extraordinary stuff. But it won't go on forever, and one of the corrections might be just around the corner. I wanted you to have a look at these. These are our 6-day charts. I call them the Super 6 charts. And we do these twice a week for gold, crude oil, S&P, and UST bonds. And they're very important if you look at how accurate they are. Every single bar is a 6-day, is made up of 6 trading days. So this is our time chart essentially, but the accuracy of these charts must be a wonderful thing to inform your broader knowledge of the markets, what they are doing now, excuse me, what they're going to be doing. You can see this blue line, 83.22, that's now stopped the market twice. It stopped it 2 bars ago, with the high 10 ticks variance from the blue line target. Today's close is 1 tick variance from the blue line target. And that blue line has been on the chart for months and months and months. So if you want an understanding of the possibilities of what markets can do, remember, everything we do is based on possibilities and probabilities. There are no certainties in trading, as in life, but the probabilities, if you get them right, are very worthwhile guiding you. And how would you know this was an important resistance area if you didn't have the 6-day chart? That was crude oil. This is S&P, and it's doing the same thing. It had a 7-tick variance in the last cycle, and the current cycle here, it's got a 5-tick variance from the blue line. Very, very accurate, more so when you consider 6 days, 6 trading days in every bar. Quite extraordinary. Let's have a look here. We've got, this is Frank's comments to you on the S&P from the 4th seal. I know not many of you are subscribed to that, and you should be. And Frank's been doing this for me for a long time. He's a wonderful young man. He came to a tutorial in Taupo, New Zealand, where I was living then. In 2011, brought his fiancée, Anne, who's now his lovely wife. They have 2 children. Frank was the first year I taught the 4th seal. And Frank latched onto it, and he just immersed himself in it for years. And one day he came back and said, you know, I'd be happy to do the charts for your clients, share my knowledge with them. So you can see what he's written there. The markets remain very strong, defy the topping cycles. And he's given you the complete target for early August that he thinks is going to be highly significant. And he's created here all the reverse retracements from the March 2009 low. Pretty important stuff. Really, really long-term stuff. You've heard me talk about that, and even earlier from there. So worth seeing Frank's comments, and he does those comments on the S&P and gold and crude oil. So do take a chance to have a look at his comments every week. This is the Super 6 chart for gold. Same thing. We had a number at 2247.3. It stopped at that at the last period, 7 ticks variance from target. Now it's broken through there. Where does it go? It just goes exactly to the next Danielcode number. And it's sitting there with 3 ticks variance at the high. And both of those numbers, all of these numbers the blue lines are working into, have been on these charts for months and months. So you can see them before it happens. If you want to have something that you can put your hand on your heart and say, I'd like to know the future, or at least have a little glimpse of it, this is the best way that I know. And it really shows you what the probabilities are of each market. This is the final one for the 6-day chart. This is US T-bond, and you can see it's been vacillating. It's been consolidating a bit, not a word I like to use. And you can see where those all that consolidating is happening. 1 tick variance from the target at the high of this last consolidation, 2 tick variance from the target at the low, and then a quick breakthrough and snapback reversal. Amazing stuff, isn't it? And if you've got these charts, it's very easy to visualize what are the probabilities going forward. So I do commend them to you. If you're interested, just shoot me an email. At the moment, those charts are being sent out by email twice a week at the weekend and on Wednesday night. Talking about that reminds me with emails, if you have an @Yahoo email address, please, please, please get another email address. There's endless trouble with the @Yahoos for some reason or other. And for those of you who have included your phone number in when you've registered at the Danielcode, I have sent an email. If an email's been returned as undeliverable at Yahoo, I've sent either a phone message or a text to tell you to I'm trying to get in touch with you, get another email, please. Some of you still, I know, I've been religiously sending off emails and they keep religiously bouncing back. And that's, if you're at Yahoo, please get another email. But if you're expecting something from me and you haven't received it, that's why. I showed you this chart 2 weeks ago with a whole lot more detail on it. All I've done is update. I haven't changed the chart except for the last 2 swings. And all I've done is put on a slightly tighter envelope to show you what you can do by varying this envelope. You remember from our last session 2 weeks ago how incredibly easy and how amazingly profitable this little simple system was. And by tightening and loosening the envelope, you can manipulate how tight or loose you want to trade. Nothing too serious, just something to get you thinking a little bit. Okay, so we have been now for a number of months doing algorithms. We have a standard algorithm. It's the number one algorithm. It's pretty unimaginative, wasn't it? And it seems to be doing a very good job. The worst market, I can tell you, is the NASDAQ. But have a look at some of these other markets. This is crude oil. Pretty nice. 3,000 up, 3,600 up, 3,600 again now, and 2,400 loss. This is the S&P. It had a flip me. Very important that you understand the points at which flip me would work. This is actually a proper flip me. Some of the other ones that you'll see later on are a little bit different. But it's had a really strong run up there, was great. And now it's on the wrong side of the trade. I should have updated this chart. I think we're back to a buy cycle now, 1 bar earlier than this is showing. Okay, this is Ether, and we've also got a Bitcoin chart in there, folks. Futures. This is the Ether futures chart, and the Bitcoin is also the futures chart, which is a bit misleading because the Bitcoin futures contract is made up of 5 Bitcoins, which is why the margin is so massive. But Bitcoin and Ether have done very, very well on their this type of trading of getting the big runs. It seems to have done awfully well. This is natural gas, which is doing very well as well. We had a $1,600 run down, a $790 loser, and now a $1,700 profit. Now, when I say loser, remember that this is just raw feed. We're not using stop loss mechanisms on it at all. We're simply going from buy to sell to buy to sell. And you can enhance these results very considerably by using a sensible stop loss and re-entry method. Leave you to think about that. Here, soybeans also, it's been good. We had 2,800 down, a 2-bar failure, then 3,400, and it's sitting on a 1,900 odd. I think it's 1,900. It's hard to see, isn't it? I can't move those numbers around, unfortunately, but I'm aware they're not easy. But that's been a terrific soybeans. That's been nice trading. And so this is wheat. Had a good run down. Had a couple of little losing trades that it swished about there. And it's back. It appears to be on its way up now. So I want to talk to you about the Danielcode tutorial. It will make you a super trader. This is the link to see the curriculum, but most importantly is what our clients have said about it. And there are 2 statements down here. One's from Mark L., who's with us this evening, and the other one's from Greg Palladini, who's a super trader and a wealth manager in California. And Greg was kind enough, when he was doing his Danielcode time trading tutorial, he said, I'm going to post everything I see and learn in forum, so to give people an idea of what it's like to go through the Danielcode tutorial. If you're interested in that, do help yourself to a free trial at the Danielcode, www.thedanielcode.com. Go to forum, click on forum, and then look for the post that says Danielcode trading tutorial or something similar. and that is Greg Palladini's observations. And that was so generous of him. Not many people are prepared to open themselves up to that sort of view or exposure, if you like. But Greg did, and it's been hugely helpful to so many of our clients. We're enormously grateful to Greg and, of course, Mark and Justin, who's done another one for us. So creating and trading time signals is the big deal. It's only available through the Danielcode trading tutorial. But that's the method, trading time cycles, creating and trading Danielcode time cycles. You heard me in the videos, you'll hear clients talking about 500% on margin on their paper trading, 700% on margin. Mark L up at 1,000% on margin. Extraordinary stuff. As far as I know, it's never ever been even said by anyone else that those sorts of returns were possible. And we have very, very tight stops. We're not risking a lot of money. We never risk more than one ATR, which is average true range over 29 days. But what I wanted to tell you is that I've had a number of emails and a couple of phone talks with folks who've been with us a long time, who wanted to do the tutorial, couldn't do it in March for all sorts of reasons. And they said to me that I was not victimizing them, but not acting in their best interest, and that they really, for reasons beyond their control, couldn't do a tutorial in March, but they wanted to have the $1,000 discount. So we've extended that for 2 weeks. If you would like to take the Danielcode tutorial, get started before 15th April, I'll reduce the fee by $1,000. And do send me your emails right now, please, folks. And this is for the first 6 applicants only. I do these tutorials all done by me personally, one-on-one with you, and 3 at a time at various times during the day is as much as I can handle. So for the next 2 weeks, we can take 6 people. The only fair way I can say about it is the first ones that get your emails into me that you want to be booked in, and you're able to start before the 15th of April. They will get the $1,000 discount, and I'm delighted there's so much interest in it, folks. Okay, let's keep moving here. I've left this up here from 2 weeks ago. Folks keep asking about our win percent, and it's a funny thing. No matter what you say to try and educate them, you can't. All they really want is show me something with a 90% win. You shouldn't be worried about the win. We're not trading to win. What we're trading to do is make money. So the programs or the techniques that make the most money, that's what you want to get. And that's Danielcode price, and even much more than that, Danielcode time signals, which are virtually unknown. It's quite an amazing thing, isn't it? So that's the better question to ask is how much money does it make? And for that, you can just go and don't take my word for it, because I won't tell you anyway. Go and see what our clients have said about it, and here are those links again. Video 1 is Mark L. Video 2 is Justin from Hunter Valley in New South Wales, Australia. And video 3 is from Scott and Amy in Colorado. So do get those. If you're having trouble accessing those, just go to the website. They're on the home page, and you can see those links there. Very important that you do so. Now, let's have a look at some of these trading techniques. So this is S&P, and you can see the big, huge bar that ran up into the 5296.50 blue line. That's target recognition, and that will work for 2, sometimes even 3 days. You then got the next bar up, which did not give you target recognition, but you already had it. And that's, I say, is valid. That holds on for 2, sometimes 3 days. But what that was a correlated sell signal. The reason that I cover all 4 of the equity markets, Russell, Dow, S&P, NASDAQ, and Germany's DAX is some of these signals are quite subtle, and they'll show up, they'll set up on one of the equities, but not all of them. And sometimes we get a situation where all the equities are flashing the same signal. But this one wasn't one of those. This was a sell signal was posted for the NASDAQ. And these markets, these equity markets, are so correlated that a signal in one can be executed in any other, provided the trade is elected. By elected means got filled. Then we say the trade was elected. And you see, he had a correlated sell signal. You were sitting on top of target recognition. That sell went straight down into the red line, which itself, that outside bar, set up a TO3 buy signal. Up it went, and then we had today's bar. And what I want you to look at here in particular is that black line, which is at 531625. Now, the Danielcode black line is the last level of support or resistance in any market. And how markets behave around that black line is really, really telling. In this case, it's had a go at it and it's refused it. For this to go higher, it has to close above that black line. So the black lines are support and resistance the same way the red lines are in the retracement groups, but the black line has that special quality that it's really giving you some insight into what the market was thinking on that day. Remember, all of these signals are valid for that day. It can all change tomorrow. But as we go through here, I want to show you some of the things in trading your Danielcode signals that you may be missing out on. Right here, this is gold. We had that big run up, which was well foreshadowed on the 6-day chart. It was amazing. Months and months before, as I told you. Anyway, that generated a sell signal. Little gap down, and the next bar went down straight into 2179 into the red line number. That created a TO3 buy signal in gold, and the next bar was an inside bar. Now, depending on whether you've done a tutorial or not, some of you will trade the inside bar, others will trade the last bar that was not an inside bar. Either way, nice $3,600 trade straight up in 3 days. But look what's happened here. We had a black line there at 2239.3, and the market closed above that black line. And that's the tell for us that this market can go higher. Not going to happen straight away, but it could. But it's cleared that hurdle, the last hurdle in that particular group of bars. Okay, here's copper, which has been a wonderful market, hasn't it? Have a really close look at this, folks. Make sure you're aware of all of these things. So it's a DC target recognition at the high. We've got long for the run-up, of course. It goes down 2 bars, and then it has one higher bar, and down it goes. Now, where it says TO3 buy, right here, if you can see it, if not, I'll get the right tool so you can see it. This is important. It's all important, isn't it? Okay. So, this buy here, this is the low of the buy. So, for every Danielcode trade signal, you get a buy, a protective stop, and the first target. The protective stop is terribly important because these signals are so powerful that a failure of the signal, in other words, there was a TO3 buy here, which next day was elected, it went up and rallied up $800, then reversed. But the failure point of that bar is where your stop loss was, which is the low of the setup bar minus 2 ticks, or minus 1 tick if you like. I use 2 ticks, you don't have to. And that's the flip me point. And if that point is taken out, the market is telling you that you're wrong. And if you're wrong, you have to get right. And the only way of getting right is doing stop and reverse. In other words, you were long all the way up to there, but there was your flip me point, and down it goes. Now, if you're trading time signals, Danielcode time signals, if you've done the tutorial, that doesn't apply to you because you had a sell on that up bar anyway. Be aware where those flip me points are. They can mean quite a lot. Okay, and here we are. Russell, TO3 sell from the high, down to the low, TO3 buy at the low, up 2 bars, TO3 sell, down 1.5 bars and a key reversal bar. TO gave a TO3 plus buy signal straight up into today's high, which has also created a TO3 sell signal for Monday. See how these things set up? Here was your target recognition at the bottom of this outside bar. This broke through. It doesn't matter. We had the target recognition valid for 2, sometimes 3 days. Don't count inside bars. This was bar number 1 right here where the cursor is. This was bar number 2. Key reversal bar. Buy the high. It's a TO3 plus buy. In fact, it was a TO3 buy for some reason. Off it goes into the sell, bound to every turn. Wonderful stuff. Have a look where this market closed, folks. Right on the 21.44.90 blue line, almost exactly to the tick. Here is soybeans. Same thing. Got target recognition on the big rally up before the high bar. Then we got the high bar into the black line at 112.21 point. Correct, that little arrowhead is called a correct. 12.21 correct 6. The market refused the black line. You can see how it ran away on the close, all the way down. That set up a TO3 sell. Down it went, and look at that little gap. You remember I talked to you at our last session about gaps with our software, Trade Navigator. It'll put a little green bar on, a dash, to show you where there's a gap. Remember the rule, if the chart low is greater than the previous day's, in this case is less, if the chart high is less than the previous day's close, then the previous day's close is the true high. So we trade true highs and true lows. Don't get caught trading gaps. This was a pretty horrible bar. This next one here, it went up just enough to fill the gap, plus a couple of points, then turned around. Remember, if you get an outside bar on the day of a new entry, you must stop and reverse. So that was a nasty one, but they do happen, and you need to know how to trade them. This is silver in our current trade. We had a sell. It did have its own blue lines there, but they're not on there anymore because the market went up through it, hit the next blue line, then turned around. That was a TO3 sell carried forward all the way down to a TO3 buy, and up it's gone again now. And I wanted to show you this to remind you again that these markets are correlated. Gold and silver are so highly correlated that a trade in any one can be executed in the other, provided that the trade is elected or filled as you like. Okay, remember that. This is wheat, and I'm showing you the same thing. Target recognition down at the low, 2 bars mucking around with outside bars. We just couldn't find, it had already found the number, but it was searching for it again. Off it went, gave you a little rally, and then it went down, had a second test, and couldn't close below the 528 correct 2. It was 1 tick above it on the close. That tells you that it's probably going to, well, that's a refusal of the black line, isn't it? So off it goes, and it runs all the way up there, does a key reversal bar at the primer high, previous high, 1 bar down, another key reversal bar reversal, which was a TO3 plus buy, roars up, big day today, but look where the close is. It's refused the black line again. The black line was at 583 correct 6. Market roared through it, had a look at the next couple of levels, got right up almost to the next red line at 569, then roared back and said, no, not today. So it has refused the black line. The highest probability is you get a correction in the immediate future. Keep looking at those black lines, folks. They're really important. And also remember that once the market's made a new higher low after the charts have been issued to you, it needs you to put on the new black lines yourself. Have a look at this. This is UST bonds. I talked to you at our last webinar 2 weeks ago about using a 2-bar stop. A 2-bar stop is the most popular and frequently used stop loss in trading of pretty well all instruments. And what it is basically a 2-bar stop would go above or below the highest high or lowest low of the last 2 completed bars. Now, if you've done a Danielcode tutorial or you're in the process of doing it, this doesn't apply to you because you will know how to trade counter trends, and as often as not, they're profitable. But if you haven't done a Danielcode time tutorial, have a look at using this 2-bar stop. It defeats the 1-bar counter trend, which can be such a pest. You can see here, this was a 1-bar counter trend, and then it keeps going again. On its run up here, 1-bar counter trend, and it keeps going. And you can prove that this stuff works, and I'll tell you why. This particular bar here, the low of this bar was exactly to the tick where the 2-bar low was. In other words, it matched that low, but it wouldn't go through it. I had to go through 1 or 2 ticks to trigger the sells, and it didn't. It knows these numbers, and it's watching them. Okay, so that's something for you to think about. Shove that 2-bar stop on your chart, and it'll give you some relief from 1-bar counter trends. Okay, folks, we're nearly up for time. That's about us for the day. If you haven't already had a free trial, please help yourself. Go to www.thedanielcode.com. Hit the free trial button. Just follow the prompts. If the program doesn't want to give you a free trial, it's because you've probably had a free trial already, and it just remembers you and it says no more. You can't have another one, which of course is not right. Contact Terry at support@thedanielcode.com, and he'll be able to help you out. And I want to give a special call out to Terry, who had a really bad fall yesterday. And it was on they caught it on their security camera at home, and he showed it to me yesterday. Boy, oh boy. My guess is he can hardly move this today. But for those of you who've been waiting on videos from your tutorials, Terry's had to take a couple of days to try and recover, folks. No doubt he'll get them all up to date over the weekend, but that's why we haven't had the usual wonderful service. Okay, I think that's about all. Finally, we have a disclaimer here which tells you that it's really, really easy to lose money trading futures if you don't know what you're doing. The good news is it's equally easy to make a lot of money if you do know what you're doing. But what I do say to you is don't risk real money until you are really comfortable in yourself, that you know what you're doing, that you understand trading, you've got your good stop loss management and everything else. It's not a game that you learn on the internet. Many have tried, including me. You do need to be taught properly to be safe in the market. And that's about it for me, folks. Enjoy your weekend. I know everyone gets a holiday tomorrow. Trade Navigator, for those of you who've got Trade Navigator, I see that Glenn said markets will be closed on Monday as well. They won't. They are in Australia and New Zealand, where we get a public holiday for Good Friday and Easter Monday, and it's a 4-day weekend holiday down here. So everyone's taken off to wherever they're going. The traffic on the roads last night was pretty sensational, I can tell you. And for me, I'm happily at home. Thank you very much. Enjoy the rest over the holiday. I'll be back creating charts for you tomorrow, and also creating signals for you on Tuesday, because because Friday's a holiday. We always need a full day's trading to reset the charts after a market holiday. So Monday we'll be resetting the charts, and we'll have new trade signals for you for Tuesday. that's it for now. I hope you've already hit your email to say you want to be enrolled for your Danielcode tutorial. If not, you better get it done soon. Thanks for being with me, folks. I'll look forward to talking to you in the future. Bye-bye for now.